Good morning, Berkshire Hathaway. Happy snow day. Today is December 2nd. And I wanted to take this day to really go over the loan estimate with you guys. The loan estimate is the most important document a buyer can get in the mortgage process. It must be given when the buyer completes their mortgage application. So it is very important for you guys as agents to understand this form because a cost sheet, the app estimate, anything that's not specifically called the loan estimate is a specific government form, is not going to be their true and accurate cost. A lender is tied to these costs, and this is why it's most important. So buyer has to get this form within 3 days of application. It's a it's a 3-page form, and we'll go over all 3 pages. The first page for you guys is going to explain what type of financing is going on and what the term is. So, of course, you always want to look at the date. Make sure the applicants are your buyers. Make sure the addresses are correct. Make sure the sales price is correct. On the right-hand side, you'll be able to see, okay, how long is the terms for the buyer? Make sure it's a purchase. Is it a fixed rate or is it an adjustable rate? What type of loan is it? Is it a conventional loan? FHA? Boom, right here, it will tell you to make sure that you're not on a different page. You're thinking it's a certain type of financing and the lender has it somewhere else. And then finally up here, if the interest rate is locked or not. As we all should know, in most cases, an interest rate cannot get locked until you have an accepted contract with a price, an address, and a closing date. So a lot of times the rate in initial applications will not be locked. So please keep this in mind. This will let you know if the interest rate is locked. Then you're going to come down to the center of the screen, where the center of the screen is going to show you all kinds of different terms of the loan. And that's what we want to really get into first here. So let's get into the center of the screen here and go down into the loan terms. So the loan term first, you're going to see your loan amount. Very important because that's really going to tell you, all right, sales price to loan amount, where the down payment is. Will this increase after closing? You want to see no. You're going to see the interest rate. Again, you can link this back up here to if the rate is locked or not. No, this rate is not locked. This is just what this rate is today. No, this will not increase after closing once it's locked in if it's a fixed rate. Then you'll see principal and interest. This is important for the payment. That's not the full payment, just principal and interest. We'll get to the full payment a little bit lower. And then prepayment and balloon payments, you always want to see those as no's. So if we continue on down, let me get my notation out. Now we get to the projected payment for the entire buyer. You're going to carry down that principal and interest from above. Then if there is mortgage insurance, it would be placed here. Mortgage insurance is only if you have less than 20% down on a conventional. This buyer has 20% down, so no mortgage insurance. And then your estimated escrow. If you don't know what the word escrow means, you need to know that. Your escrow comes from one section down below. So let's drop down here, right here. This 475, as you can see, 475, 475, 475, 475. What's included in the escrow? It's going to tell you right here. It's going to tell you right here. Property taxes and homeowners insurance. Yes and yes. Those are included in the escrow. So when you have your mortgage payment, you have your principal and interest, you have your mortgage insurance, and then also you have your escrow. That will then tell your full payment of $1,933 a month for this estimated buyer. Going down, at the very bottom of page 1. Now remember, this is a 3-page form, so we're not done. At the bottom of page 1, it will tell you your estimated closing costs, and then the estimated cash to close with down payment included. So the closing costs, $16,095. Estimated cash to close, $76,095. But page 2 of the loan estimate breaks all these closing costs down. So let's get to page 2. And I will zoom out a little bit here so you guys can see. Page 2 has multiple sections. And we are going to go through every section here line by line. So page 2 will break down all of the closing costs. I'm just going to zoom in again. So let's go through section A. Section A, as you can see, what's it say here? Origination charges. Section A, this is me. This is the lender. This is where you will see all lender fees. Now at West Penn, we charge a flat admin fee. If you're working with Everest, $1,255 is our flat fee for any conventional loan. The section above here shows points. It's blank. There are no points. Now, a buyer can pay 2 types of points. They can pay origination points, which means maybe a lender doesn't charge $1,255. They're just going to charge 1 point as the origination charge, and 1 point is 1% of the loan amount. So if I was a lender that charged 1 point for a $240,000 loan amount, that'd be $2,400. So as you can see, much better there when it comes to that. A buyer can also pay points if they're going to buy down their interest rate. And you would also see that in this section here. Section A is all lender fees. Then you'll get to section B. What is section B? Section B is services you cannot shop for. So there's going to be some things in the process, like an appraisal or a credit report, that a buyer is not going to be able to choose. A lender is going to run a credit report. A lender is going to do the appraisal or get the appraisal done for the buyer. Those are items they cannot shop for. So in total, section A and B, lender fees. Then section C, as you can see by every fee next to it, these are title fees. These fees are going to be different depending on the exact title company that you use. Most title companies have about the same fees, but company to company, they could be different. It should be up to the buyer to pick their title company and shop around. The one item that always catches everyone's attention is lender title insurance. It's the biggest fee there. What is it? Where does it come from? So title insurance is state mandated. So it doesn't matter what lender you use, what title company you use, title insurance is always going to be the same. There's lender's title insurance, and then there's owner's title insurance. We will get to the owners in a second. The lender's title insurance protects the lender in case there's a problem with title. So that's where that fee comes from. It's state mandated. Nothing you can do about it. It is the same right across the board. So that's section A, B, and C. A and B, lender fees. Section C, title fees. Section D adds A, B, and C up. So that's the left side. Let's get into the right side column now. Right side, section E, taxes and other government fees. So we're going to pretend like this is in Allegheny County. To record documents at Allegheny County, they charge $376 to make it public knowledge. That's why buyers are going to get all those junk mail and everything in the mail afterwards, because this is a public transaction. Then the biggest variable in our Pittsburgh market, transfer taxes. Transfer taxes will be different, can be different, municipality to municipality. If we're going to do the standard, it's 1% for the buyer, 1% for the seller. So 1% of 300,000, this is a 300,000 purchase, would be $3,000. This is the buyer paying their full portion of transfer taxes. Then we're going to get into prepaids. The first item in prepaids is homeowners insurance. No one knows their exact estimate or their exact cost of their homeowner's insurance when we start. It's only an estimate. This is where we can get a little bit of variable from lender to lender. You might see some lenders put an egregiously low number here because it's an estimate. They don't know. They're just making their costs look lower. Here, we're going to have $1,500 for the year. When we talk to our insurance agents, that's what they're telling us roughly here for a $300,000 purchase. Then you'll have prepaid interest. When you get a mortgage, you pay interest from the day you close to the end of the month. So this will vary depending on when you close. Again, some lenders' initial estimate will start this with 1 day. We don't have a closing date yet. We have no idea how many days of interest are going to be on this estimate. So we leave it at 30 days because that's a worst case scenario. And we want to make sure we're showing our clients real numbers. Next, we'll get into the initial escrow. This, again, biggest variable we're going to see. We always start with 2 months extra for homeowners, and then we do a full 12 months of property taxes. So if you have a lender doing 1 month or 2 months or 6 months, their costs may look lower. It doesn't mean they're actually going to be lower. And then Section H is every other cost, maybe a BHHS fee or owner's title insurance will go here, or anything extra that really could be part of the transaction. When you get to the bottom of the loan estimate, you have calculating cash to close. You have the total closing costs, you have the down payment, and the total estimate to the buyer. If you have an accurate loan estimate, it should be very, very, very close to the actual costs. If you have any questions, feel free to give me a call, and stay safe and warm out there.